What's up everybody? Welcome to the Stocks channel. My name is Corey and today we see a continuation of the massive sell-off across the stock market as we now come into critical support that could lead to capitulation. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were down 3.2% as we now come into extremely critical support and we're getting very oversold, well below the lower Bollinger Band, but those Bollinger Bands will continue to expand. So remember, we had two downside price targets as long as we have the bear trend, and that was SPY 400 to close the gap, and then the next price target is down here right around 393, and the highest probability to hit that target at 393 was on May 10th, which is now tomorrow. And going from today's close, that's only about another 1% drop, so it is very likely that tomorrow we could hit that price target. Now this is a very critical support because below this level we are going much lower, which could lead to a capitulation event. Even though I don't necessarily expect to see capitulation at this point in the game, you can never completely rule it out. So if we don't start seeing buyers stepping in around the 390s on SPY and we start losing that support zone, we are going all the way down into the 380s and we don't really have strong support until we get all the way down to about 370. So that is going to be your capitulation event if we do indeed start to see that massive waterfall wave of selling. Now keep in mind, this is a bear market, so this is a downtrend until it's not. So you are doing yourself no favors if you continue to try to call the bottom. So while I am giving you downside price targets, there's no telling that those levels have to hold up as support. So you still need to be incredibly risk off during this bear market or continue to short at resistance and lock your profits at support. You can very clearly see this is a strong downtrend with very bearish price action. And even though we are getting very oversold, I continue to tell you to treat every bounce as a lower high before we make a new lower low, because it's a downtrend until it's not, and downtrends are lower highs and lower lows. All of the bears at this point will be hiding out at higher lows right around 416 into the 420s, with strong resistance at 428 and a big bear battle up here right around 436 to 438. But don't expect us to bounce all the way back up to critical resistance unless we start seeing some bullish price action. Remember, bullish price action is going to be on smaller time frames first. So if you're looking at 30-minute or 60-minute charts, you're looking for higher highs and higher lows, and we have not been seeing that. That's why we continue to trend lower. So watch that very critical support zone right around 393, and if we do start to break below that support, we are looking for the possibility of a full-blown capitulation. You can see we're still seeing decent selling volume, but we're still starting to see volume taper off just a little bit. So if we do start to see volume dying off, that could be a good indication that we're due for that counter trend rally, because we are coming into such strong support, so you will want to pay attention to that as well. On the NASDAQ 100 triple Qs, we were down 3.91% as we come into very critical support right around 297, and we are below the lower Bollinger Band, so we are getting oversold. We still have a very strong bear trend, so if we start losing the support zone right around 297, you're looking for us to start trending down towards our price target at 284.7. Remember, that is a valid price target as long as we have the bear trend, so you shouldn't be expecting the triple Qs to go any higher until we hit that price target or get some type of confirmation with bullish price action or a trend reversal. Bullish price action at this point will be getting back over 318 and closing back over our resistance trend line, which is right around 323, then coming back up to test resistance at 334. If we can get back above 334, that will be a bullish breakout, but we're still going to have a lot of bears sitting up here right around 347. Above 347, we're looking a lot more bullish, and we will likely go up there to close the gap at 360, but you cannot get bullish until we start breaking back above the 320s and the 330s, and we are sitting all the way down here with a number that doesn't even start with a 3. So respect the fact that this is a strong downtrend, and the triple Qs are in a bear market, drawing down over 20% from the previous all-time high and in a strong bear trend. Now the good news for the triple Qs is that we are selling off on decreasing volume, so eventually the sellers will get exhausted, or we're going to break down through critical support and get that full-blown capitulation. So you can never rule out the possibility in every bear trend that a counter trend rally could be right around the corner. So if you continue to see lower volume selling as we come into these strong support zones and our price target, that is the highest probability chance that you're going to start seeing that counter trend bounce. Now keep in mind, it's still a downtrend, so you're not looking for new higher highs. You're continuing to expect a lower high and then another lower low until we get some type of bullish breakout. On the Dow Jones, we were down 1.97% today, and again, we are seeing it on lower volume, and we're down to that critical support at 322.6. Now, there's a good chance when we get to these levels, and we've seen it on the other indices, that we will break down below that previous low to get a stop raid, which means people will be forced liquidated out of their positions as their stop losses are triggered. So there's a good possibility that we will dip down below this support, but again, this is still a very strong support, so don't be surprised if we do start to bounce from here. If we do start to break down, we have another price target all the way down here right around 309, which is a long ways to go, so I wouldn't be surprised if we put a lower high in before we get down to that target. Remember, these are downtrends until they're not, so there's no reason to be bullish at support. If you do start to see a counter trend bounce, you can play a short-term long trade, but you do want to take your profits at resistance and not get greedy. Resistance at this point will be at 326.4 and up here right around 333, and stronger resistance will be in the 330s and right around 340. If we start breaking above 340, that will be the bullish breakout, but we can't get bullish until we get that confirmation in the price action. On the Russell 2000 IWM ETF, we were down a whopping 4.21% today, and we sliced right down through that support zone right around 177, and we are well on our way towards our price target right around 170 and the gap close at 165. You can very clearly see these are strong bear markets with strong downtrends, and we're continuing to sell off on increasing volume in IWM. We're getting a little too oversold, so we could be due for a bounce in the short term for a retest of the breakdown below 183 or a retest of right around 177.6. So if you do get that bounce, that is not an opportunity to get bullish. You are looking for a lower high as we continue to trend lower to fill this gap and hit our price target right around 165. We can't get bullish until we get all the way back above 200 and start closing back above 205, and that's a long ways away. So continue to respect the fact that this is a downtrend until it's not, and any bounces in the short term should be treated as lower highs before we continue to trend lower. On the ARKK ETF, we were down 9.86%, and I continue to warn you that there is no reason this ETF needs to go higher, and day after day, this ETF continues to put in lower lows. So we are now getting very close to my price target at $40, and there is no guarantee that we have to bounce off that level. So continue to expect more downside until we get some type of bullish breakout, which at this point isn't until we get all the way back above about 56 to 60. So this is a very strong bear market, and there's no telling how low it can go unless it bottoms out at $0. So if we do start breaking down below $40, you're looking for the next support right around 33.7. If we start to bounce, you're looking for strong resistance at 47 and 52. So continue to respect the fact that this ETF is in a very strong bear market, and there is no reason this ever needs to go all the way back up to retest all-time highs. So this is not something you should be accumulating as it goes lower, unless you absolutely have strong conviction that this is the ETF for you. On the VIX, we were up 15% as we see the VIX bouncing off of that support at 30 and starting to trend back up to 38. And I do think there is a real possibility we are going to see the VIX elevated to 38 before we see a bottom in this market, and possibly even break out and get into the 40s. So at this point, watch the VIX closely because it's still in a bull trend and it's still at very elevated levels, which means you should be expecting more downside in an extremely volatile market. If the VIX starts crushing below 30, that will be more bullish, but as long as it's trading above 24, you need to be extra cautious because this bear market could continue to trend lower as long as we have elevated VIX with elevated fear. On Bitcoin, we are currently down nearly 8% as Bitcoin is now testing that extremely critical support zone at 30,000 because we did break down below 37,000, which was the other critical support. We had minor support at 35,000, but you can see that blasted right through like it wasn't even there, which does not surprise me because below 37,000, we were more than likely coming down to 30K, and that's exactly what we saw. So if this support zone right around 30,000 does not hold up, that means Bitcoin is coming all the way back down to about 28,000. And below that, it is full-blown capitulation, which means we could be coming all the way back down to 20,000. So treat Bitcoin as a very strong bear market if it does lose support at 30,000, or at least be extra cautious if it loses support at 28,000. I do believe this is an extremely strong support zone, and if you are bullish in Bitcoin for the longer term, you should be considering adding on risk at these levels. Otherwise, you are more than likely not actually a Bitcoin bull and you were just jumping on the hype train. So use these strong support levels for long-term accumulation only because right now this is a strong downtrend with very bearish-looking price action. But normally, if you know your Bitcoin history, these are more often than not the best buying opportunities. You should be buying the waterfall waves of capitulation in the crypto market and not panic selling because if you know your crypto history, you want to buy the fear because 9 times out of 10, it is going to lead to a very impulsive rally. And everybody that was panic selling and getting stopped out are usually the ones left behind, and everybody that was taking on risk is handsomely rewarded. So I am risk on at Bitcoin at these strong support zones, and consider doing the same if you are long-term bullish. But we can't forget about the fact that it's in a strong bear trend and it is continuing to trend lower. So if you're buying at these levels, you still need to be prepared for Bitcoin to come all the way back to $20,000 just in the event that it actually does. The next bullish breakout is all the way back above 41 and 42,000, so we do have a long ways to go before we get any bullish confirmation and price action. On NVIDIA stock, we were down 9.24%, so there is absolutely no more questions on how bearish this market is getting when we see blue chip names like NVIDIA dropping nearly 10% in a single day after such a drastic sell-off already. Remember, we still have this valid price target to the downside at 150, and with today's price action, we can nearly smack it with a stick, so we are getting closer and closer to what could be the bottom in this stock. However, we don't want to try to call a bottom in a strong bear trend, so continue to expect lower prices if we do slice down through 150, but right now that should be a very strong support zone and a very valid price target. Remember, there is still a possibility we get a counter trend rally to retest the breakdown below 110, but as you can tell, it looks like that bounce that we got on May 4th was close enough and we're continuing to see more selling. Earnings isn't until closer to the end of the month, so we don't have any catalyst coming in the near term, so you'll need to be more patient for that. Bullish breakouts at this point are all the way back above 210 and then closing the gap at 230, and not any sooner than that because this is a strong bear trend. Upside resistance will be right around 174, 184, and 199, and remember, below 179 we have no more support until we get to the price target at 150. On Tesla stock, we were down 9.07%, and Tesla did lose those two support zones at 856 and 828, which means we're likely coming down to retest the low at 762. It looks like we could do that as soon as tomorrow, and we could find strong support from there. And if we don't bounce off 762, you're looking for a retest of the low at $700. To the upside, you now have resistance at 828, 856, and 900. And remember, we are bearish below 900, so we did expect this to come because we were breaking down below support, and we do have the confirmed bear trend. I continue to warn you that these are bear markets across the board, so you need to be expecting lower lows after we put in lower highs. And you need to get in the habit of locking in your profits if you're taking long trades and only shorting at strong resistance, and consider taking your profits at support. On Apple, we were down 3.32% as we did lose critical support at 156 and our support trend line at 154, which means we are more than likely coming down to retest the low at 150 and below that at 147. So it looks like a lot of these stocks could be coming into very strong support as soon as tomorrow, so if we do start to bounce off of these supports, you will be looking for the counter trend rally to put in the lower high. The lower high on Apple stock is more than likely going to be a retest of 154 or 156, or if we break above that, you're looking for the lower high to be right around 162. Remember, these are downtrends until they're not, so continue to sell the lower highs and expect lower lows until we break the downtrend and get some type of bullish breakout. A bullish breakout will be a close above 162 and getting back over 166, and not any sooner than that. On the financial sector, we were down 2.39% as the financial sector continues to put in new daily closing lows as we have the strong bear trend and we're losing all of this critical support, so there's no reason to be bullish on the financial sector at this time. The industrial sector went down 2.42% and we still have bearish price action losing support, and we still have a strong bear trend. The healthcare sector was down 2.59% with the confirmed bearish price action, and we're only 1 day away from having the full bear trend, so continue to expect lower prices from here. The energy sector got absolutely destroyed today, going down 8.27% and coming all the way back down to the 50 EMA in just 1 day after putting in a 52-week high, so this is extremely bearish price action. If we lose the 50 EMA, you're looking for that next leg lower, and you're not getting bullish unless it can break back above $78. So jumping back over to the S&P 500, I continue to tell you that this is a downtrend until it's not, and you need to be very cautious of more downside because we could be reaching full-blown capitulation. I do think there is a real possibility we get a counter trend rally once we get to our price target, but you can't take anything for granted. You need to watch the price action, and you need to put in the work each and every day. You could be a very profitable trader in a bear market as long as you're using great risk management and you know your entries and exits, and you're only buying at very oversold or critical supports, or you're only shorting at strong resistance. This is not the type of market where you want to be getting greedy and getting sloppy and trying to get whipsawed in between support and resistance. So know your levels and then just be patient and let the trade come to you. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, when the market was drawing down over 35%, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can click on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.